If you're holding XRP, the last few days probably felt like a total roller coaster in the dark. I mean, a huge, brutal drop that just seemed to come out of nowhere. But was it just random market chaos? Or was there something much, much bigger going on behind the scenes? Well, let's get into it and figure out what really happened.
Okay, first things first, let's just look at the damage. We saw XRP tank by a staggering 19% in just one day. And to put that in perspective, the price actually dropped lower than it did during that big crash we had back on October 10th. So yeah, this wasn't just a little dip, this was a straight-up nosedive, and it had everyone asking the same thing.
So what in the world just happened, right? There were no big, obvious headlines, no clear reason aimed right at XRP, and yet the sell-off was just vicious. To really get why, we've got to zoom out, because this fire wasn't just burning in one little corner of the market.
Yeah, this was not an XRP-only event, not even close. What we all witnessed was a market-wide domino effect, a wave of selling so powerful it crashed across the entire crypto space and even spilled over into totally different kinds of assets. It was a classic panic, but the scale of it? Wow.
Now this is where it gets really interesting. Look at the scope here. Of course, XRP got hammered, down almost 19%. Bitcoin also took a big 10% hit. But check out silver, down 17%. That's the key. That tells you the fear wasn't just a crypto thing. Something much bigger was spooking investors everywhere, making them sell off anything they could.
And this number, man, it just shows you the raw force of that selling pressure. Over $2.6 billion in leveraged positions got totally wiped out in a single day. That is forced selling on a massive scale. And when those liquidations start to cascade, they create this brutal downward spiral that just feeds on itself, pushing prices even lower, even faster. With this much carnage, there has to be a reason, right? This isn't just random noise. When you start digging around, a few key clues start to pop up, and they paint a picture of a market that was already sitting on a knife's edge. So our first big clue points right to Washington, D.C. You know, if there's one thing markets hate more than anything, it's uncertainty. And it turns out a super important piece of crypto legislation just hit a major snag, sending a wave of fear through the whole industry. So here's the deal. Senator Lummis announced that the big crypto market structure bill is getting pushed back. And the real fear isn't just about the delay. It's that with elections coming up, the bill might not even get enough votes to pass at all. And that kind of regulatory limbo is pure poison for the markets. Now, this second clue takes us away from Washington and all the way across the globe to Japan. There's this growing theory that a very complex financial strategy, one that's been propping up markets for years, might finally be starting to come apart at the seams. It's called the Japan carry trade, and to put it simply, for years, huge investors have been borrowing money super cheap in Japanese yen to go buy riskier stuff with higher returns, like stocks, and you guessed it, crypto. But as things change in Japan's economy, that whole trade could be reversing, and that forces those investors to sell their assets all at once to pay back the loans, which creates exactly the kind of sudden, sharp, market-wide sell-off we just saw.
So you've got political uncertainty at home, and these global economic tremors happening abroad, both hitting at the same time. And the result? A market that is absolutely gripped by extreme, you can feel it in the air fear. And we can actually measure just how bad that fear got.
Just like we saw earlier, the pain was everywhere. This was not a crypto-specific problem. When you see assets as different as Bitcoin and silver both dropping by double-digit percentages on the same day, you know the vibe has shifted from just being cautious to straight-up panic. And this number, well, it says it all. The Crypto Fear and Greed Index, which is a great way to measure market sentiment, crashed all the way down to a 7. For some perspective, the last time we saw fear this extreme was at the absolute rock bottom of the market back in 2022. This is full-on capitulation mode.
But this is where the story takes a really fascinating turn. Because while everybody was panicking, totally glued to the falling prices and the sea of red on their screens, something fundamental, something potentially game-changing, was quietly going live in the background.
Seriously, everyone was just watching the charts, watching the chaos unfold. It was almost impossible to see anything else. But if you were able to just ignore that noise for a second, you would have seen something incredibly important was happening.
Right in the middle of this massive sell-off, a critical piece of tech went live on the XRP ledger. And this wasn't some tiny little update. This was arguably the missing piece of the puzzle that banks and big financial institutions have been waiting for.
It's called permission domains, and here's why it's such a big deal. It basically lets these big institutions create their own compliant, walled-off VIP sections on the public ledger. That way, they only have to interact with other verified players they trust. This solves a massive, real-world headache for them around compliance and risk, and it finally unlocks the door for them to start using this for real-world stuff like payments and trading.
So this leaves every investor, you and me included, facing a classic dilemma. On one hand, you have a market that looks technically broken, totally drowning in fear. And on the other hand, you have a fundamental leap forward in the actual technology. Two completely opposite signals hitting at the exact same time.
The bearish case is clear, and it's pretty powerful. Some analysts believe this isn't just a correction. They think this is real structural damage to the market's foundation, the kind of thing that could kick off a much longer downturn, a reset that could last for months, not just a few days.
But then, of course, you have the classic contrarian view, which Ripple's own CEO quoted. It's that timeless idea that the moment of maximum fear is also the moment of maximum opportunity. That when the sentiment is this bad and everyone is selling, it might just be the absolute best time to make a move.
And that brings us to the final, crucial question. Are we just looking at the fallout from a temporary market panic driven by fear and forced liquidations, or is this a fundamental shift, presenting a rare long-term opportunity, especially now that the tech itself just got a huge upgrade? That is the billion-dollar question every single investor is asking themselves right now.